The three biggest differences between personal and business credit. Look, there's a lot of misconceptions out there about business credit, one of which is that your personal and business credit are intertwined, and that couldn't be furthest from the truth. The reality is any business can build its own credit profile and score and then use that to qualify for all kinds of credit and lending. How do you do it? I'm about to decode this right now during today's training. So if you have credit issues and you're launching a business or own one and want to maximize your funding, or you're just sick and tired of personal inquiries, personal guarantees, and using your personal credit to try to fund your business, well then this training is for you. We're gonna get in there, teach you everything you need to know to separate personal and business credit by breaking down the three biggest differences between the two. We got a lot to cover, so let's dive in. So the first biggest difference between consumer and commercial credit is just the use of each type of credit. Look, so many business owners make the mistake of trying to use their personal credit to fund their business. And the reason this is a mistake is personal credit was never designed to fund a business. Like, the appetite for spending money of a business is significantly greater than that of an individual. Like, you may never need to spend $10,000 at Dell on home computers, but you very well could need to do that for your business. So as a result of this, the limits on business credit cards are significantly higher than consumer credit. As a matter of fact, per SBA, limits on business credit cards are 10 to 100 times higher than what you're actually going to find with consumer credit. So consumer credit has lower limits because it's used for things like regular everyday spending or using your personal credit profile to get a mortgage or to get a car loan. Where in the business world, your business credit profile and score is used for you to qualify for loans and credit lines for your business, high limit revolving credit cards, even auto financing that you can get in your business name. And the other thing is, the more you build this business credit out, the more you use it for its intended purpose to fund your business, then it really allows your business a way to fund itself, where you're able to get more and more credit, a lot of which without a personal guarantee, without a personal liability, and a lot of which without a personal credit check, not based on your personal credit quality. The second biggest difference between personal and business credit is just the linkage itself. So your personal credit is linked to you as an individual and your social security number. Your business credit profile is linked to your business through its EIN number. So this is the only legal way in the United States you can really have two credit profiles. You have one as an individual that you're using to get credit to fund your personal life, and then you have a separate one for your business that's used for your business to fund itself. The more you build this business credit profile and score, the more types of credit and lending become available for you, which is why it's so essential to build your business credit, to be able to create this greater separation between you as an individual and your business itself. And the third biggest difference between business and personal credit is the actual reporting itself. So consumer credit reports to TransUnion, Equifax, and Experian. You probably already know that. And your credit scores are based on 5 factors like your payment history and your utilization, how long you've had credit for, your actual credit mix, or how much new credit you're applying for. So because of these 5 factors, it's very difficult and time consuming to build a really strong, like 800, 850 credit score. Now in the business world, business credit reports are with Dun & Bradstreet, which is the biggest credit reporting agency in the world, Experian Business, and Equifax Commercial. So Equifax and Experian have commercial divisions in their actual companies, and that's where business credit is housed. And Dun & Bradstreet, of course, isn't even present in the consumer credit world. The same as TransUnion isn't really present in the business credit reporting world. So in the business credit reporting world, you're building credit with Dun & Bradstreet, Equifax, and Experian, and your business credit scores are based mostly on just how you pay your bills. So all we need to do to get good scores is get accounts that report to the business credit reporting agencies, pay those accounts as agreed on time or early, and that factor alone will give us exceptional business credit scores. So we can build business credit very quickly because of this, and this helps us get very high limit accounts that we're using to fund our business. So now that you know the difference between consumer and commercial credit, the next question is, how do we get you maximum funding using business credit? Well, that's super simple to do. There's 2 links I want to share with you right now. First of all, check out the link in this video to access creditsuite.com/EIN. At creditsuite.com/EIN, we give you a step-by-step guide to successfully build your business credit. Now, you also want to go to creditsuite.com/consult, also in the link into this video, because that will actually get you with our team where we'll do a finance assessment. We'll talk about your fundability, things to improve to make your business more fundable. We'll talk about the steps, the tips, the tactics that you need to build business credit. And we'll also talk about the things you can do right now to qualify for all kinds of loans and credit lines for your business. So make sure you check out those 2 links. And if you got value from this training, make sure you also like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.